Hello, and welcome to the Bankers Leadership Series in association with Wolters Kluwer, looking at the data challenges faced by financial firms when addressing complex and changing regulatory and reporting requirements. I'm Joy McKnight, Deputy Editor at The Banker, and I'm joined by
Rajat Somani. I'm with Wolters Kluwer. I'm responsible for the product and platform management.
Richard Chengareddy from Standard Chartered Bank, and I'm the Global Head of Regulatory Affairs.
Ruth Wandhöfer, Citigroup, Global Head of Regulatory and Market Strategy.
Peter Bonish, Managing Partner of Cage Strategy in the City.
In Chapter 1 in this 5-part series, we'll be exploring the results of the Bankers' recent survey, which polled more than 100 financial institutions to benchmark their data readiness for regulatory reporting and compliance. So it's very interesting. The results of the survey really showed that the top concern for most financial institutions was really keeping up to date with the pace of regulatory change. But it's also, a lot of them also chose the idea of the regulatory deadlines as well as one of the major challenges. Ruth, in your opinion, what is the major challenge and how is your organization really trying to cope with it?
Well, I would say, first of all, the challenge is bigger if you are a multi-country entity. So we in Citi are across 100 countries, which means we're exposed to 100 types of different regulatory regimes. These keep moving at different paces, and we have seen in the last few years, particularly after the financial crisis, but even now, that the complexity of regulatory expectations keeps to increase. And that is something that means both staying on top of it is a challenge, but also feeding that through the organization, creating some global consistency of application, operation, and then making sure that it all is to the benefit of the customer of the bank, the client of the bank, is really quite a central target that we follow, and it's a complicated task to deliver.
So Richard, would you agree with what Ruth has said? And in your opinion, which are the sort of the biggest regulatory or regulations that are coming into play? From the survey results, most financial institutions picked, let's say, the International Financial Reporting Standards, IFRS 9, but also Basel III, which is a major regulation internationally.
Yes, Joy, indeed, I would absolutely agree with Ruth's comments. It is that the regulatory reform agenda since the financial crisis has been very significant. I think some would argue perhaps has overshot where the response to the crisis should have been. And we've had to work very hard as an internationally active bank, active predominantly in Asia, across Asia, Africa and the Middle East, to ensure that we keep pace with not just the number of regulations, but the kind of breadth and depth of those regulations, which have been very significant. I think I would very much support those observations from the survey that IFRS 9, Basel III, often referred to as Basel IV, or the latest incarnations of those rules, are seeing very substantial changes from the banks in terms of the systems that are required, the data requirements, as well as development of new models. And this is a very significant challenge in terms of trying to implement those changes and to ensure there's a harmonious application of those rules across many different markets. And that's a very big challenge for us, given our presence in over 60 markets.
And Peter, from your perspective, do you see really a step change in terms of how, whether it's regulators or senior management, really are demanding a more dynamic and granular reports for compliance?
Yes, I do. There's clearly a change in the focus of regulatory expectation, but I agree. I wonder whether there's perhaps been an overshooting. The regulators are very enthusiastic that institutions should have an architecture, should have a plan for what they're doing, and yet I don't see any evidence of regulators having one themselves. I see a lot of disparate initiatives that are being poured upon institutions on a timetable that is aggressive, to say the very least, and I wonder actually whether they're being counterproductive. I think in a lot of cases many of the regulations that are being introduced now are creating more risk than they're alleviating.
And do you think that the regulators are aware of that?
I think if they were not aware of that, they'd be less culpable. Frankly, I think now we're in an environment in which many of the regulators, particularly those regulating international institutions, are not attending properly to the environment into which they're pumping the regulations and the ability of the system, the institutions that make up the system, to respond. I think they're almost in the situation now where they're creating more problems than they're solving. And that's, I think, comes through in the survey very clearly. I think the concern about legacy systems is driven by that. The fact that institutions have not been able to spend the money that they have on replacement systems and coping with the new data requirements with a new approach from an IT architectural perspective, but have had to put band-aids on existing systems. To me, that's a real worry. That creates operational risk.
And Rajat, you have a lot of experience looking across the banking industry, but also within the industry itself. Sort of, what are you seeing are the major challenges, and how are banks trying to address those challenges?
This is quite onerous for banks to comply with regulations, because what's happening is not only are regulators introducing new regulations, it's happening at various levels. It's happening at the supranational level, supranational regulators. We have the accounting standards, the IFRS 9, which you referred to, and then of course there are local regulations. So banks have to be able to meet all of these. These regulations, not only there's a multitude of regulations, the requirements to report are more frequent. The data that's required is wider, and in fact the data is also required at a transactional level, at a very granular contract level. So that is what is the biggest challenge for banks, is how do they get the data together in a way which can be consistent, which does not need reconciliation, because until now banks have been, and as was referred earlier, banks have been creating one-off solutions only to meet the requirements in time. And while they're doing that, they're creating some operational risk, which was referred to, which is, and banks do feel exposed. So one of the things that they're doing is they're trying to create the broader data infrastructure to be able to meet the demands of the new regulatory compliance.
Okay. What another interesting finding from the survey was that just under half reported that they found interpreting regulations a bit of a challenge, which I think could suggest that firms are struggling to source the appropriate skills and expertise. Ruth, do you think there is an issue there, and how difficult is it?
It is very hard to interpret regulations if you haven't been part of the creative process of actually designing the laws. So I spent many years within the sort of Brussels perimeter to actually help regulators to design laws. And when I joined Citi, I kind of tried to translate that to the bank and re-engage with the regulators directly, because you actually have to be part of this whole iterative process to consult them on the technicality of what some of the political ambitions could be translated into words that would translate into action. And I think this is actually where, of course, you have to be very mindful of the fact that regulators are not technical experts on banking, and that they try to achieve quite specific regulatory and political outcomes. And I think marrying the two is always a practical challenge, which unfortunately translates into multiple interpretations when it comes to implementation. So we often have seen with all sorts of laws, whether it's in Europe, the US, or elsewhere, that the outcome of those may have had unintended consequences. They may have not been as standardized as envisaged because they were motivated by certain visions, but these visions never arrived at the end customer or at the end implementator. And I think that remains to be a challenge, because we don't want laws to be so specific that they will be technically outdated quickly. So they have to be technologically future-proof. And at the same time, we need to make sure that we translate the political and sort of consumer protective, investor protective vision into the laws in such a way that it can live on for a longer time. And that remains to be a challenge which can only be resolved through iteration.
Certainly we've seen that the need to go out to clients and ask them for disparate bits of information in order for us, for instance, to know how to categorize those customers in regulatory reporting, that creates a burden for our customers. And particularly if the regulation, I think often we're facing regulation that's extraterritorial in nature. And so with our business, if we're dealing with clients in, say, Thailand, and we're applying EU rules to those clients, it's difficult to explain to them that there's a rationale that it stems from Europe rather than the local regulatory regime. So we've always been very strong advocates of the need for a harmonised international regulatory system, because as an internationally active bank, if we don't have that, it the local rules that are applied across our markets create tensions within our group, and that's something we try to avoid.
I think that is the holy grail we've been all pursuing for a very long time, and I think we do start seeing some of those things progressing. But if you just take the Basel process in itself, there seems to be political agreement on the way forward, and then still the actual application of the law and the interpretation of the law is very diverse because markets operate in different ways, which is a natural thing. So to converge ultimately is a hard thing to do, and I think what I see is that that sort of parallel digital ecosystem that is evolving is sort of obviously been designed in a way that it already operates multi-country but without legislation. So the question is whether that may entice the old regulatory requirement to become more harmonized because we all have to work together to make this work globally. And I do think we need to get much closer to cross-border solutions that work effectively across all the asset classes and transaction levels.
There are challenges with complying with these large regulations. I think the regulators are trying to remove systemic risk, right? They're looking at across, not just the risk for a single bank, but they're looking at it across the industry. What we are seeing now, and these are early days, is moving away from form-based reporting to actually data-based reporting. And the regulators are now asking for data, and as I mentioned earlier, some of the contractual level data. So what they're trying to do is trying to collect the information so that they can see across the entire industry, in a country, in a region, but this is a process. It's going to take some time. So to your point that regulations made in EU may not be totally applicable. I think it's a process. It's probably going to take some time, but I think some of these initiatives are probably required to be able to maintain the soundness of the system.
It's regulators really also learning themselves and taking different types of approaches to make sure that we use the data and the technology we have available to get a more meaningful outcome, right? I think that is a very positive thing, yeah.
Okay, well thank you so much for your insights. In Chapter 2, we're actually going to start discussing around the technology challenges and how those can be overcome.